Hello again. Now, whether or not the Monetary Policy Committee of the Reserve Bank will increase the interest rate this week, that's a big one. Some experts believing consumers will be digging even deeper into their pockets soon enough. The high oil price combined with the domestic currency's recent weakness has seen a large rise in fuel prices as well this month. This will have an effect on inflation. The rand is averaging about 15 rand 20 to the US dollar, recovering from the volatility that weakened it to 15 rand 58 last month as emerging markets currencies came under pressure. Well, let's get some MPC expectations just 24 hours before with Investec economist Annabel Bishop. Annabel, good afternoon. Thank you very much for your time. Welcome to the lead here on eNCA. Up or down tomorrow? What's your thinking?
Yes, look, unfortunately, I don't think we can expect down, and that's obviously something which I think is past with last year. The possibility for a 25 basis point hike is quite real, and I think this is quite an important meeting. It will be our first hike we've had in a number of years, and sadly, globally, monetary policy is starting to see a move away from easy monetary policy. Our interest rates are very low, and the Reserve Bank is eventually expected to follow suit, potentially tomorrow or else next year.
Okay, what will be driving that move up?
So I think the fact that the United States saw the Federal Open Market Committee, their Reserve Bank in the United States, MPC committee, move away from as much asset purchases they were looking at each month. So they do QE, and of course that's called a tapering QE. That's a precursor to the United States eventually hiking its interest rates. And of course, advanced economies do tend to engage in quantitative easing, and then they taper it. And once that's finished, then they start to hike interest rates. In fact, even in the UK, they're already anticipated to be hiking their interest rates quite soon. I think the answer to your question is that a number of other emerging market economies have hiked their interest rates, and South Africa hasn't done so. And of course, that's been the reason for the rand weakness recently. As you know, the rand weakness translates quite quickly into petrol price hikes when there is obviously even some increase in oil prices as well. So what we're finding ourselves in a situation is inflation's going up in South Africa. We'll see that in the November print for inflation. Today was only the October figures that came through. And of course, that's expected to be a bit elevated into next year as well. And as a consequence, the Reserve Bank is expected to hike. So 5% for CPI inflation today. But when we get this month's print, November print, next month, inflation is expected to be 5.5%.
Okay. And quickly, Annabel, for consumers, I mean, it means that if you have debt, it's going to cost you more?
Absolutely. And, that's quite sad, because if we actually have a look at some of the debt information surveys that have been coming out, they're showing that the middle income consumer in South Africa, in particular, they highlighted that group is quite squeezed. They've taken on quite a bit of debt, increased debt and counselling. So, I don't think we're going to find ourselves in a position of any time soon of interest rate cuts. Even of flat interest rates. It looks like the Reserve Bank is going to hike, and I think consumers need to prepare themselves and be careful of debt.
Yeah, if you got some savings, higher interest rates, you'll be smiling a little bit because you're going to get a little bit more money.
And I think that's the point. Those who can save and obviously do so for a rainy day will benefit from higher interest rates. But I think, the reality of the situation here is the Reserve Bank is looking to hike interest rates for another reason. And that's that if we don't potentially see an interest rate hike tomorrow, it could be quite likely the rand could move to 16 rand to the US dollar, and even weaker than that. Remember last year we saw the rand very weak. And that's the risk. And, global financial markets are expecting an interest rate hike. And there's, of course, it's happening in other emerging market economies, and market players are saying that if South Africa doesn't hike, that's the risk for the rand.
Besides helping our volatile rand, very quickly, what are other benefits of higher interest rates? Of course, if you've got some savings, a little bit more money, the rand might benefit, as you've just said. What else, very briefly, is good about higher interest rates for our economy?
So the South African Reserve Bank follows inflation targeting. They aim to keep inflation between 3 to 6%, and obviously targeting the midpoint of 4.5%. And with inflation likely to be at 5.5% when we get the next inflation reading, as you and I chatted about just now, higher interest rates are seen to help pull inflation down. And of course, we don't like very high price increases in South Africa for anything. Electricity being a case in point, but of course a number of other goods and services in South Africa that are affected by changes in interest rates. Unfortunately, electricity isn't. So I think the Reserve Bank would be looking to hike interest rates in order to keep inflation contained. They do expect to see this tick up in inflation as we go into November, but then towards the end of this year and into next year, they expect inflation to moderate a bit if we move into a slightly higher interest rate environment. So that really will be the rationale behind the Reserve Bank looking to move on its interest rates.
Okay, the number again, how many basis points do you think you said it's going to go up by, likely to increase by tomorrow?
Well, let's hope it's only 25 basis points. That's 0.25%. If it's more than that, if it's 50 basis points, 0.5%, that's going to be obviously quite a hefty increase. So, a very slight increase, just 0.25%. And I think it's really more of a warning to everyone, as opposed to a very, very steep interest rate hike. I'm sure you recall many years ago that we got very big interest rate changes. But this little small increase tomorrow, I think, is really being sent as a warning to everyone. Be careful, don't take on too much debt. We're now moving into an upwards as opposed to a downwards interest rate cycle, if the Reserve Bank does choose to hike tomorrow.
Okay, to be a beginning of a new cycle of up and up. So thank you very much, Annabel, for your analysis this hour. She's, of course, an economist with Investec. Now,